Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. Some of the newest trends in pot stocks for 2019 has been ETFs, or the exchange traded funds. So if you aren't really sure about what to invest in, they offer you a portfolio with a bunch of different companies in there. And the first ever cannabis ETF to trade in Canada was called the Horizon Marijuana Life Sciences ETF. It's risen 54% year to date. So it doesn't completely erase the downdraft of pot stocks that underwent between October 1st and the end of last year, but it's reaffirming the cannabis industry as a force to be reckoned with. So expect these cannabis trends to continue this year. We're likely to witness a number of industry trends with the cannabis industry as it spreads its wings. So for example, the emergence of the alternative cannabis options should be big by this fall. Recently, Health Canada outlined its plans to approve new consumption options as well as edibles and non-alcoholic cannabis-infused beverages. So by no later than the one-year anniversary of the legalization of its recreational pot in Canada, not only do these alternative products have a higher price point and better margins than non-traditional dried flower, but they're also more likely to attract brand new customers who are wanting to smoke cannabis. We've seen that in every single state that rolls out. People that don't want to smoke are very interested in edibles in the low dose or micro dose, and they want convenience. That joints are the number one product sold for users. I was surprised that the number one demographic is middle to older white females are the number one demographic to buy pre-rolls. I would not have thought that, but the matter of convenience and not wanting to roll or get your hands dirty, it's really a matter of what's driving the market demand is convenience and just kind of a lack of knowledge. So if you can eat something and know what to expect without having to worry about overdosing, with the heart palpitations, I think there's some time and development that needs to happen in order for people to really understand what they're going to experience while ingesting. And so time will play out with national markets like Canada coming on board. Consolidation is another trend that investors should expect to see continue throughout the year. With any industry, it's expected to see that growth by 38% worldwide in 2019 is bound to be a rush of companies up and down the supply chain that want to get involved. And unfortunately, it's often the case that with up and coming industries, the rush to compete can snap margins. So supply and demand, simple economics, the more people that are involved, the lower your price comes down. We saw that in the coffee industry with Starbucks, where they came out, they were on every single block, they were lowering the price, and they were forcing mom and pops to shut their doors, and then they raise their price back up. So to push to the uplist of reputable U.S. exchanges, you can expect to continue in 2019. Following the uplisting of CannaTrust today and Villa Farms International this past week, there is now 9 pot stocks either on the New York Stock Exchange or NASDAQ. So being listed on these exchanges as opposed to the over-the-counter exchange means improved visibility, better liquidity, and genuine legitimacy. However, the desire to uplist to the New York Stock Exchange or NASDAQ could also spawn an unwanted pot stock trend in 2019, which is share consolidation. So this unwanted pot stock trend is about to become popular. So encapsulating what share consolidation means is that you probably are more familiar with a reverse split. So the opposite of a traditional stock split is a reverse split, which shrinks the number of shares outstanding, but results in an increase in the company's share price. So to be clear, it doesn't increase or decrease a company's market cap, but the sole intention of a reverse split is to increase a publicly traded stock's share price in order to make it more attractive to Wall Street investment firms or to remain listed on the New York Stock Exchange or NASDAQ, which have minimum share price requirements. So given that a low share price is more often than not associated with a troubled company or untested business model, reverse splits are typically viewed as having a bad connotation. So the reason we're likely to see a reverse stock split take hold in 2019 is simple. There's a lot of respectable market cap pot stocks that want the validation of being listed on a major exchange, but it may not have a minimum share price needed to make the move. So for example, the vertically integrated cannabis company Alephia Health is in the process of acquiring Emblem. So Alephia Health and Emblem run both medical clinics, and they're expected to produce a combined 130,000 kilos in the peak annual output. So that may be good enough to slot the company in its 6th largest grow in Canada by peak annual yields. But in spite of a $300 million market cap and a $173 million market cap for Emblem, so Alethea's $1.91 share price may be an impediment to uplisting. It's pretty evident based on the rampant share price dilution that's plagued the space, the likelihood of a reverse splits being needed for uplisting, or at least the very least to attract Wall Street coverage and or investment is growing by the day. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge, and I'm out.